please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
With this backdrop, let's invite our market master for the morning. Atul Suri, CEO of Marathon Trends-PMS, joins us now. Good morning, Atul. We meet in a very celebratory mood. You had told us 16,000 on the Nifty, haven't you? Well, now have you advanced that target to a few years earlier?
No, I think it's these levels. You know, I had said 17, but these levels, honestly, Lata, is more a function of direction. You know, the important thing is that whether you touch 17 or no, the thing is that two things really matter. One is, am I allocated? Am I long equities? And the second thing is, am I in the right spaces? So when I meet clients, etc., I find that these are the two things that need to be addressed for me as an individual and for every market participant. So all these levels that we give, yes, I mean, they may or may not, you know, you may get somewhere near. But the important thing is that you get a sense of size and magnitude and a sense of direction. So when I meet people, the last 1,000 points have really taken most people by surprise. You know, we were coming out of a 6-month, very, very difficult market, and where a lot of the mid-cap, small-cap indexes were down 20–30%. So people are really surprised, and they're really looking for these reasons, you know. So I really think that one must have a belief in the longer-term trend that we are in this market. And one must not really wait for the perfect situation, perfect correction that at which stage I'll deploy. You must get into this market. Yes, it's run up a lot. Yes, it will correct. But the thing is that you have to look beyond these short-term cycles and ultimately be allocated to equities, because I still feel that we are part of a larger bull market, which I think will carry on for the next 2 to 3 years. The second issue that comes up is the spaces, because again, when I meet people, you know, everyone's saying that, you know, yeah, the market's making new highs, but it's very narrow. And then when you wonder why they are saying that, the answer is that very often the stocks or the sectors that they hold are not moving. So that also is a reality, that any long-term bull market, it does not mean that one sector will go from point A to Z. Every correction will actually throw up new leaders. And it is our job to really go identify how stocks have behaved in the corrections, what are the fresh breakouts. So I feel that the market, the leadership has changed. There has been a sectorial change. So a lot of people again find themselves in stocks, spaces, which the market is doing a lot, but it's not much happening. And you will have to bite the bullet and ultimately be sort of, you know, fierce enough to really exit out of these positions and get into new sectors. I'm not speaking of 1 week, 1 day, 1 month. I'm speaking on a multi-year trend. So this fresh round, this 1,000-point rally has thrown up new sectors. It's very easy for us to see what they are. It's very evident already on the screen. But the difficult part is to be able to exit those that are not performing. As I said, to bite the bullet, very often you may have to book a loss and move on to these spaces. Because if you don't do that, you know, you have two pains. One is the pain of holding something that is not moving. You may incur a financial loss. And second is an opportunity loss, which I think is even bigger. So I think that in a larger bull market, every correction will see a bit of churn, a little churn in the portfolio. That's par for the course. It is our job to identify what is the next set of leaders. And the next set of leaders, whether it is consumption, we've been talking on this for months, whether it is select pharma stocks, whether it is the private financials, it's there. It's there on the screen as of today. We can see it every day. But the pain is that who's going to bite the bullet? Who's going to exit out of losers? Who's going to get in when things have run up a wee bit? So I think that's the whole game. Targets are good. They give you a very good sense of direction.
Yeah. Atul, good morning. Though, I mean, of course, you know, you could argue that at least over the last 1 month, the rally has been broad. We went through a period where the market was narrow, but it's broadened a bit. Just look at Axis and ICICI once again. You know, you may not want to talk individual stocks, but I mean, if you can on this one, Atul, the bank Nifty, of course, is made up of HDFC Bank and Kotak, which have 52% weight. You could add an IndusInd, and the rest, which have been the dogs for last many years, but have started to perform. But that's coming at the cost of the erstwhile leaders taking a bit of a backseat. Your thoughts on that?
Sure. So I think, Anuj, you know, there are some stocks that are marquee names, and they represent a theme, almost a sector. Again, I'm like, for example, Reliance. I've been talking about it, that here is a stock which almost has a sectorial feel. And when Reliance comes out of a 7, 8 year, 9 year consolidation do not expect it to be a small move. It can be a very, very tectonic shift, and the impact it has in the market. Please, I have a vested interest in this stock. I own this stock, so please do your own research. I run a PMS, so whatever I say, take it with a pinch of salt. The stocks that you mentioned, these are commercial, private lenders. Again, when these stocks, which have been through a multi-year bear market, actually 2, 3, 4 years, and when they are kind of breaking out and coming out, what you are seeing is new leadership emerge. This is to the earlier point that I said, that when markets go through corrections, a new set of leaders will emerge. And very often, some leaders in the previous move may actually rest or not do much. So it's going to be important. Even if you extend this argument further, you look at pharma, another sector which has been a 3-year kind of underperformer. And the kind of leadership that you're seeing in some of these pharma stocks is phenomenal. So I feel that in the last 2 or 3 months, you are seeing a churn, and it is important that you are able to press the trigger. Most people just see it, they are shocked, and they only complain that, everything is going up, but my stocks are not going up. So that is why then they start rationalizing, saying, no, this rally is very narrow, this rally has this problem. And then, in today's world, you can list down 10 different problems, right? From politics to GDP growth to interest rates to dollars. So every day, you can find a headline. I can really list out 10 such things. But Mr. Market is doing something else. And our job is to actually work with Mr. Market. So from my understanding, new sectors, new themes are emerging. And I think the crux is going to be able to move into this, because these trends, these stocks are not just a one-off small mid-cap stocks. They are marquee names. They are sectorial and theme representatives. And these, I think, can run for the next few years. So sooner or later, somebody will have to get into it. The sooner, the better.
Oh, absolutely. I mean, we thought 2017 had spoiled us, right? With the kind of returns. I mean, look at 2018 so far. Some of these large caps, so many of them up 50, 60, 70%. Atul, hi, morning. I wanted your thoughts on how to approach technology stocks now. Because, names like TCS, Tech Mahindra, Infosys have done very well this year, already up 40, 50, 60%. You think the time has come to churn out of technology names, or do you see more upsides here?
I don't think so. I feel that technology still has a lot of legs. And barring these large caps you mentioned, there are some mid caps out there. Again, I have a vested interest. I do have mid cap IT in my portfolio. I feel the kind of chart formations that they have is very, very sublime. I'm a dollar bull, right? In the short run, I think the USD has been on the back foot. But I personally think that the US dollar is going to strengthen going further. And the key beneficiaries, apart from performance of these mid-cap IT stocks, is also going to be currency. You're going to have the same tailwinds in pharma. Again, I'm not talking about 1 day or 1 week, right? I'm talking about a little longer term time trend. So I think a stronger dollar is going to really benefit these two sectors going ahead. And one sector which I really want to talk about, and something I am also exposed to, is MNC pharma. We are talking about pharma. Yes, there are a lot of stocks which are making bottoming formation, 1 year, 2 year kind of bottoming formations. But if you really want to look at blinder charts in this market, look at MNC pharma. What's happening there is phenomenal. These are stocks where most people hesitate because they say there's a liquidity issue. Yes, I agree there's a liquidity issue, but you can always buy a basket in that. The kind of chart formations, the lifetime highs, the volumes, the delivery volumes, the quality of breakouts that is happening in MNC pharma is again fantastic. So as I said, that these are newer themes. One will have to get into them. One will have to reshuffle their portfolio. So don't get stuck. I'm not saying that mid-caps will not move. Mid-caps will move. Again, if they are in the right spaces, look at mid-cap pharma stocks. So essentially, these themes will move out and will be the leaders of the next up move.
Okay.
What is the direction, whether it's 12,400 or 12,000, honestly, that doesn't matter. Once you have a sense of the larger market, will I get in on a correction? These are all rationalizations the mind will keep playing with. I think that is something which we have to live with. But I feel that the market portfolios require a churn. Sooner you do it, the better, because the leadership that's emerging is actually running away.
Yep, that it is. Atul, what about financials? Will you buy the HDFC and the relative underperformers, supposedly, HDFC banks and the Kotaks, or will you buy the ICICIs and the Axis, or will you buy both?
See, I won't want to speak on stocks.
No, I mean the two categories, retail versus corporate.
Sure. So if I look at the longer term theme, I think that the mega trend in our markets is private sector financials. And why I say this is that these stocks or these themes were doing very well before this correction that we saw in early 2018. Even during the correction, you found that these stocks didn't really correct much. In fact, they were continued to make lifetime highs. And when the markets again moved up, again they are making new highs. So this is, I think, a characteristic of a mega trend. And this is something you absolutely want to ride, because this is where you will find your multi-baggers. Yes, as I said, new themes will emerge. You may have to do the shift. But something that if I have a mega trend in my portfolio, I am a little resistant from just churning it for a 5 to 10%, because ultimately what we are looking for are multi-baggers. And I think that in this whole private sector financial plays, I feel that maybe there's a short-term correction, maybe they are resting, they've run up very hard, but going ahead, I think that they can be much, much larger trends. Again, disclaimer, this is where my positions are, so I may take it with a pinch of salt.
Okay, by the way, the market's cooled off a bit. The bank nifty is in the red actually, 50 points down now. So from the high point, it slipped quite a bit. That's after making a new high. And of course, even the nifty has cooled off. The mid-cap index trading with a bit of a red. So that's interesting. And PSU banks, the power financiers, these are few stocks where you're seeing a bit of a red at this point in time. Atul, the one sectoral index which has not done well or as well is auto. Of course, large part of that is because of Maruti and Tata Motors, the two big stocks, though others have done well like M&M. But your thoughts on this space?
No, I think they are resting. You can clearly see that there is a bit of a rest. Even you see the two-wheeler space has had its fallouts. So definitely it's a sector which is resting. But even in there are some stocks which are mega trends, and one should not be in a rush, because I feel that these could re-emerge. But you're right that at the moment, there's not much happening there. One would not allocate fresh money at the moment. For me, the top picks continue to be consumption, which I have been saying for the last 3-4 months, MNC pharma stocks, and private financials, which still seems to be the overweight or the mega trend as far as I go.
Okay, Atul, we leave it at that. Thank you so much for joining us, and we hope your 17,000 Nifty target comes sooner rather than later.